This is the first time. Will the market continue to go up in 2022? Today, for Paris and Bazcast, you have Gertev and I.
Hi guys, how you going?
Discussing this very important topic, which is quite topical and quite on the on terms of everyone basically thinking what is going to in 2022. And just as a brief intro, as I mentioned before on Instagram as well, today at the same time, we are streaming to 4 different channels. Yep. We've got YouTube, Facebook, Instagram, and LinkedIn. So we've just been finally been able to go live on LinkedIn as well. So we've been waiting for more than 6 months, I would say. And we're so excited to be sharing our intel, our insights, and our on-the-ground sort of, the pulse of the market and what we are seeing from our clients that we're seeing. So topic of discussion today, what will happen to the market in 2022?
I think everyone's asking that question, obviously, with the changes in lending. More supply coming on the market.
Interesting times ahead. So in terms of, in general, how at any given time, what the factors that impact the market, if you call it on a macro level, there's 3 ways that you can really define what impacts the market. So one is you got your political factors, this political stance of the government. Then you've got the policies, the monetary policy, the fiscal policy. You've got your interest rates, so availability of cash, availability of money, and then you've got supply and demand. And all of those 3 macro factors are going to be playing a key role in 2022, which will be interesting to see how it pans out towards the end of that. By the time this time next year, we'll be reflecting back on what has happened. So let's talk about the interest rates and availability of money first of all. So tell us what are you seeing in the market from a lending side of things?
So what we've seen in the last couple of weeks is a lot of the major banks have put up their fixed interest rates. So if you've got a current rate that is variable, I would strongly suggest to fix that rate if it suits your needs. Obviously, you got to look at your financial position. So fixed rates are definitely on the rise at the moment. What also I've noticed is sometimes when the loan is approved and the loan hasn't drawn down, in between that period and you haven't done a rate lock. So basically a rate lock is you pay a fee to the bank and you get that rate guaranteed at settlement. So what's happened is, say you've signed the loan contracts at a certain rate, and when the time comes for settlement, if the fixed rate has increased, you'll get the new fixed rate at settlement.
That has happened last week to a client of ours, hasn't it?
Normally the clients obviously have the position, we don't want to pay the fee, we'll take the gamble, but now it's
in a market.
It's backfired now. So I would suggest rate lock is probably important at the moment. The two-year fixed rates with most of the banks are the sharpest on the market at the moment. Where we're going higher than the 2-year fixed rate, the rate is starting to increase, which tells us that the rates are going to eventually rise from late next year, potentially going to 2023.
What is your insight onto that? So I think we were talking about what the RBA official cash rate predictions they're speculating it to be.
So the official RBA cash rate, they haven't started increasing that yet. I think that's when they start increasing that towards the end of next year. That's what they're saying. That's when the market will start feeling it. Now, where does it end up? Time will tell. But they are going to go up.
Because if you
can't stay this low.
So if you go back the last 20 years, the history of the cash rate in Australia, where we are today is as low as it's going to get. If you can lock in a rate, now is the time to be able to lock in a rate. Naturally, discuss your individual scenario with your broker of what benefits that are to you.
Because there are certain things with a fixed rate you can't do, which you can do with a variable rate. Say, for example,
let's talk about that.
If you're looking to sell, there'll be break costs involved. A fixed rate home loan with a lot of the banks doesn't come with an offset account. So you can only put a certain amount of extra funds into the loan during the fixed period. Otherwise, there'll be penalties involved as well. So you got to make sure the fixed rate is the right one for you as well. With a lot of my clients, what I'm doing is we're doing part fixed, part variable. So you're getting the best of both worlds. So you got a certain repayment on on a part of the loan, and then you got variable repayment on a certain part of the loan where you got the certainty and the flexibility.
Yeah.
So you can split the loan. A whole loan doesn't have to be fixed or variable.
Yeah. And because we are live, you're welcome to ask any questions. We're happy to answer any questions while we're talking through. So feel free to send your questions as we go. Now let's talk about where you mentioned the rate lock. What's the fee involved in locking the rate?
That varies bank to bank.
Okay.
It can be 0.15% of the loan, particularly it has a certain fee of $3.75 at the moment to rate lock it in. So there's certain campaigns banks are running. So, but there is a fee for rate locking the loan, and depends on the loan size as well if there's a percentage of the loan amount.
Yeah. So you pay $300, you guarantee
that's same rate for up to
90 days for the same rate.
Yeah.
So that when the settlement happens, and the rates go up, you don't pay the higher rate, you get that lower rate.
What's the downside of that? Sometimes the customer pays the rate lock fee and the rates don't move.
Don't go up. Yeah. So it's a gamble.
Then you pay the fee.
But right now, with what we are seeing with the a lot of banks increasing their fixed rates, I think it makes sense.
Yeah, they're only going to go up, and I would strongly suggest I'm looking at that. Mostly the fixed rates have just recently gone up. So if you're fixing now, you could probably potentially take the gamble over the next couple of weeks because the banks have just put them up.
That's right. They won't do it again straight away. Yeah.
But in saying that, one of the banks have put them up twice. Pretty
already.
Pretty quickly as well.
Okay. Well, they've got the ability to be able to do that. You can't really tell them what to do, hey?
Yep.
As much as the government tries. Now, let's talk about the supply and demand side of things. What are your predictions? So, from as of now, as of I believe this weekend, so on Saturday this week, there are 1,800 auctions scheduled, which are
it's one of the biggest auction days this Saturday, which tells me there's a lot of stock coming on the market.
That's
so
right.
If there's a lot of buyers that have missed out this year, I think hold tight, your opportunity and your turn will come. There's going to be normally sometimes around the Christmas period, there's sometimes stock hanging around, vendor needs to sell, transaction needs to happen. Sometimes a buyer can get a good win there as well.
That's right. Yeah. So the next month is going to be quite critical.
So whoever's ready, finance approved, ready to go, I think December could be a bit of a golden period here.
Yeah.
And in saying that, with your finance approval, very important to have your finance pre-approved, ready to go, because coming up to Christmas, certain banks have deadlines in turnaround time for getting the loan documents, printing, signing. So very important to get that. I think the next 2 weeks are very crucial for that in terms of your finance, because finance is number one. If you don't have your finance in place, you can't negotiate hard on the property.
That's right. And even in terms of your solicitors, so do factor that into account. So if you are looking to buy between now and end of the year, even early next year, some solicitors go on holidays for the first 2 weeks
So what
of
I've
January.
even noticed today, I've got a couple of emails, solicitors are off between 20th to the 10th of January.
Yeah.
Which is basically 3 weeks out of the calendar. So you got to make sure if the settlement is happening prior to the 20th or after the 10th.
We're here to help you. We'll be selling and renting out properties and helping our clients. But naturally, those the solicitor side of things and banking side of things is out of our control. So
wish we could do that, but we can't.
Perfect. So there's your supply and demand. So basically, supply is due to go up. Which tells you that the demand is still going to be there. And if you think about it, we still don't have international travel. We don't have those international buyers that are moving in here.
I was reading an article yesterday. They're saying the amount of migration that will happen over the next couple of years won't be enough to reduce the supply. So a couple of big statements have come out that the property market is going to be drop in 2023. We've all heard that before. I think property real estate's a pretty safe investment. If you buy in the right location, right suburb, I don't think you can really lose. Yes, the way the market's gone this year, it's been crazy. I think it's probably not great that it keeps going like this next year again.
It's not sustainable at this level.
You want to, so you want this steady growth as well. So for the longevity as well.
Absolutely.
But money's still cheap, even if the rates do slightly increase. It's still lowest in history. So it's a great time to buy property.
So and then the final factor impacting the housing market on a macro level is the political factors, political stability and policies. And naturally, we've got a, I'll try again. I think there's something here. So there is a looming election. And naturally, when it comes to political games, I don't think that you would get a lot of strong policies that are going to be discouraging.
And also in saying that, they don't
property market.
They don't want to put the handbrakes on too quickly,
That's
too
right.
strongly as well.
Yeah. So they've got
a lot of people are carrying big mortgages.
Yeah.
So you've got to play it safe as well.
Yeah, so I don't think that at least the first 6 months of it, you're going to have much of a reduction from that point of view, because the government's not going to be favouring massive changes to discourage.
Because sometimes when you see gains of 50%, 80%, and there's only gain 10, 20%, the market's going down. So the market is definitely not going backwards. What's that saying? We're going 160 kilometers an hour, and we're now going
130 kilometers an hour.
The market's still very
still going, but it's not going at the same rate that it used to. So that's what we found. So there you go. So supply and demand, monetary policy, and political factors, the three bigger sort of factors that impact the property market. So in a summary, I don't think it's going to go down. So to answer the question, will the property market continue to go up in 2022? Yes, but not at the same rate of growth, which we've seen from January 2021 up until now, where there's been a growth of double digits, like nearly 30% in some suburbs. So you probably won't get that again, but I reckon it will continue to go up.
And there's no land out there.
Land is one of those.
If you want to buy in any suburb, land is gold.
Yeah.
Construction costs are going up, materials are going up. So I can't see the prices going down.
We only waited 5 months for our timber that's finally arrived. So it's definitely. Any questions while we are live, definitely feel free to send them through. And even if we don't answer them now, we're happy to answer them for you afterwards as well. Do subscribe to our podcast channel if you are driving and wanting to get the latest episodes just as audio only. We do convert this into a podcast on Apple and Spotify podcast as well.
Yep.
Any other final words before we finish off?
So have your finance ready. I think that's the key. Before
be
Christmas.
Ready to strike.
Also, what I've noticed over the last couple of weeks, if you've got equity in an existing property and you want to use that equity in that property, it's best to take that equity out first before you go do the purchase. Otherwise, it puts a bit of pressure on to get both deals done at the same time.
How are the valuations?
The valuations are coming in very strong. So I think the bank valuations are up to scratch with the market. Yeah, that's what I'm seeing with the valuations we're ordering. So
and let's touch back on the episode that we previously had, which was very well received, more than 10,000 views for that one, about the serviceability changes. Can you touch on that a little bit, just as a summary?
So the buffer rates increased to 3%. The serviceability is slightly tightened, but I don't think that's really a deal breaker at this moment.
At this point, but I think
some of the deals are a bit tight. Yes, they are failing servicing, but in a nutshell, that change is not detrimental to the market at this stage.
But it is likely to have an impact.
But as the rates start to increase, the buffer starts to increase, assessment rate starts to increase, so that could
and I think it's going to impact more to the first home buyers that have a limited deposit to go, and when they've got their serviceability being affected of how much they can borrow, it affects what they can actually buy eventually, which then ends them up going into townhouses, units, and so on.
One interesting market is units haven't really moved over the last 5-6 years. With housing the way it's going, I wouldn't be surprised if units do move next year.
So units could become more attractive next year.
Have stayed flat, even in great suburbs. So I think that's a market that could potentially rise next year, with housing becoming basically unaffordable in some regions.
Especially for those first-home buyers. There you go. Well, thank you so much for your time, your attention. We really appreciate you coming back every week to hear our live stream and our podcast. If there's any topic that you would like us to cover in more detail, definitely send us a DM. We'll be happy to answer it ourselves, or even if we have to bring in a guest speaker, we will be doing that also. We will be covering the best suburbs to buy for a first home buyer very soon as well. So stay tuned. And if you are a industry professional that wants to come on to this podcast, do let us know as well. We'll be happy to hear your views as well. Thank you so much for watching. We'll see you guys next time.
See you guys.